Hi, my name is James DiBiasio. I'm editor of DigFin, covering digital finance, fintech, and digital assets. With me today is James Quinn, managing director at Q9 Capital here in Hong Kong, a new company that is dedicated to providing digital asset services to the private wealth industry. We're going to be talking about Bitcoin, about its role in a portfolio, about why people are interested, how to access it, is it scary, is it something safe, how to go about it, and what do people in the private wealth industry need to know.
Hello, nice to see you.
Yeah, nice to see you. Thank you for coming.
Great to be here.
Yeah.
So, whether it's a private bank or a high net worth individual,
sure.
When people are thinking about digital assets,
right?
Okay, when they're thinking about the crypto space,
yeah,
I think the first thing they still think about is Bitcoin.
Yeah, sure.
So, tell us, why is Bitcoin still relevant? It had a huge up, it had a big boom, then a bust, crypto winner,
right?
And it seems to be back. But tell us why is it back, and why should investors care?
Well, I mean, it's been around the longest. It was the first, and part of what makes the digital assets work is being around a long time. People believe in it, so to some degree, obviously, compared to gold or something that's been around a really long time, it's just in its infancy. But in digital asset space, it's kind of spanned the test of time, and it has unique characteristics that investors like. So not just private wealth.
Yeah. So what makes it more interesting than gold, for example?
Right.
Why?
So here's how it's similar to gold, which is good about both of them. Is it's a good store of value. It's outside the financial system. It's not controlled directly by any particular government or tied to any particular fiat currency. And like gold, it's divisible, transportable. But with digital assets, the divisibility is easier. It's even easier to transport. It's even cheaper to store. It's super easy to move, and direct transfers globally take seconds or minutes, which you just can't do with physical gold. So you can physically hold Bitcoin or lots of other digital assets actually, and then make an easy and low-cost transfer pretty much to anybody.
Do you think for a lot of investors, are they interested in those characteristics of digital assets, or do they just see something that was going up and they wanted just to speculate?
Oh, I think it's a combination of both. I think as the investor base and just the general public at large has learned more about digital assets, has learned more about Bitcoin, they start to see the other store of value factors. In fact, as a currency, I would say that Bitcoin is less successful than folks probably assumed it might be or thought it might be when at its inception. But as a store of value, I think it's becoming more and more successful and frankly more and more accepted because of the characteristics I just mentioned.
It's also known for volatility.
Sure.
And some people love the volatility.
Right.
And others might be a little put off by the massive swings that we've seen in this. So as a store of value, that volatility play, is that, what are the kind of conversations that you're having with people when it comes to this question?
Yeah, so they worry about that. And to your first point, part of that volatility comes on how fast it's growing and on the way up, right? So it's not just all downside volatility with Bitcoin, but it's fair. But it's a low correlated asset generally. It's become a little bit more correlated over time, as a lot of financial assets actually have this year. But generally, it's a low correlated asset, not that well correlated to gold in particular, actually, not that well correlated to risk-on assets, although it has been more lately. So the lower correlation helps with the volatility. And then the volatility has actually dropped over time, and I think as it becomes more mainstream, you can expect to see that more. People don't worry about the volatility as much now as they did, and I think before the conversation was, well, what if it goes to zero? They're pricing it to zero. Now they might expect a drawdown, but they're not really pricing it for zero anymore. They're saying, okay, this has some value now, and it has a lot of potential upside. That
reduction in volatility, is that also because the way that people trade it, the instruments they use, has evolved?
Partially. So I'll start with actually the type of customers. Digital assets were more of or still are very much so, but almost exclusively a retail business a few years ago. Now there's a lot more institutional business. I'll take CME futures, that volume has picked up massively. Options volume across multiple exchanges has picked up a lot. That helps dampen volatility to some degree, lets people hedge. It's kind of moving into the modern financial sector. And institutions are the ones trading at the CME, right? Institutions are the ones coming to these new exchanges. So in that respect, it's become a little bit less volatile. They have bigger balance sheets. They can hold things for longer, and they're making longer-term investments.
Right. Some people might have heard some news this year around some exchanges that have had trouble, some accusations by the DOJ in the U.S.
Yeah.
Are we seeing a shift in the way that people use these different venues? I mean, what do investors or private banks need to know about these venues? How do they differentiate?
Well, I mean, historically, certain exchanges have got up very quickly. They have the technology. Retail went in. What they do around AML, what they do around compliance, what the different exchanges do around where their customer bases are. I think what they need to know is who's been around a while in the space, who has a great AML process, who has a know your transaction process for darknet coins, to make sure coins are clean, who's following all the laws and rules of, not just the regulations where they sit, but just being cognizant that this is very much in the public eye now. Obviously, an institutional investor, a private wealth investor is going to be thinking about those things a lot. That's usually one of the first conversations we have.
Yeah. Are wealthy individuals able to do that kind of research on their own, or do they need help?
I would say from our feedback is they need some help. They don't, especially if they're kind of new to the space, they don't really know who the players are, how people access the marketplace. Most of the time, access to the space isn't available through their existing brokerage relationship or private wealth relationship. So they go to their friends, their family. That's one of the reasons we actually started Q9 was our contacts in the private wealth space, our network was saying, hey, we need some help. We want to invest in this, but we don't exactly know how to do it. So we set up the business to do that.
Yeah. And what are one or two things that you always tell your clients or talk to people about? What are the most important things they need to consider beyond just an interest in a particular asset, but in terms of getting into the space, making sure they're doing so in a way that's going to be allowing them to do what they want to do in a portfolio sense, but also protect them? So
first of all, choose your relationship carefully. So who are you signing up with? Legally make sure they're, from a regulatory basis or just in terms of processes, really about safety and security, really about following the regulations, choose your partners wisely. And then what do you plan to do? I mean, some platforms are a little bit more one-dimensional. So, okay, you bought Spot. That was probably a great first investment, but maybe you can't do anything else on the platform. You probably don't want to then open a second relationship to do something else and a third relationship to do a third thing. So you want to look for a platform that's somewhat complete and holistic and will be able to grow with you. The space is going to grow really quickly. You don't want to have to keep changing platforms to keep up with it.
Yeah. So in terms of that growth, is that growth primarily still around Bitcoin? What else is out there that people are looking at and are going to be relevant for investors?
Right. So in terms of coins, yes, Bitcoin is still the most popular and even very recently has outperformed a lot of the other assets. But there's plenty of other coins still around doing interesting things, new protocols coming out. What I tell folks is, hey, you start with Bitcoin or start with something simple, learn about that, grow into other things. You might have heard about DeFi recently, decentralized finance. That's in its simplest form, really just financial services being recreated in a completely decentralized way. That to me is a 2.0 or 3.0 story later for people to get interested in. So those are opportunities after you've spent some time in the marketplace. But in terms of product set, it used to be all about spot trading, and then it was spot trading on exchanges. Now there's borrow and lending, biggest, fastest growing area in digital assets. You can lend Bitcoin for a few percent pretty easily, lend other digital assets for double-digit returns into fixed income products. Structured products are probably the fastest growth area coming up over the next 2-3 years, and those are very simple structured products, super similar to private wealth for private wealth investors to what they're already investing in let's say, equities.
Right. And what are the legal arrangements around these things? What do people have to do? Is there any kind of disclosures they need to make?
Yeah.
How regulated or unregulated is this space?
Well, it depends on who your relationship is with. People, those companies need to be making similar or the same disclosures as you're getting for traditional assets. These may not be regulated, but I think you expect, regulated or not, some degree of self-regulation from whoever you're dealing with, right? So disclosing to you what the risk looks like of a particular product, obviously all the other terms and conditions, you should definitely expect that and look for that as part of your due diligence on a relationship.
Yeah. For classic providers of services to wealthy individuals and families, private banks.
Sure.
Is this something that they will be able to handle themselves? Even the nitty gritty things like how they book it, how they position it in their accounts.
Yeah. So one of the reasons we started the business, in addition to our clients, let's say our individual private wealth network coming to us, was wealth managers saying, hey, our clients want to trade some digital assets. They want to trade Bitcoin. They want to trade some products. It's actually not that easy for me to offer that. Do you want to help us do that? So we basically went into business to do that. At this stage in the game, I'm sure there are some private banks and wealth managers at different stages of developing that business, some farther along than others. But for any of them, and for us, it's not an easy lift. It takes unique knowledge of the space, of the technology, booking, how transactions work, how is blockchain different than settling in an old-fashioned way. So if you're looking to, unless you plan on doing that heavy lift internally, it's usually easier to partner with somebody or kind of work with another firm in terms of getting that on your platform.
From an industry point of view, we hear a lot about how blockchain-based finance can lead to massive efficiencies and really create, Wall Street 3.0 or whatever jargon you want to use.
Sure.
So for people in the industry itself, what do you how do you think their industry will change, the way they do their jobs from this stuff?
Well, I mean, you can make a multi-million-dollar transaction or transfer with the press of a button. It goes from point to point. So that creates a lot of difficulties for firms that have different kinds of checks and balances for an old-fashioned system and making sure those things go off without a hitch. But once that is in place, well, that means the whole system is a lot more automated and a lot cheaper to do. Unfortunately, I think it's going to lead to job changes, reduction in workforce, but the automation ultimately will make financial transactions much more cost-effective for everybody.
Custody is an issue that comes up a lot. People still seem very concerned about issues around custody and safekeeping of these digital assets. But there's been a lot of evolution. So is custody solved? Is this something that has already been kind of taken care of? Or are there still outstanding questions?
No, it's not solved. I mean, so our conversations used to be, a couple of years ago, I don't know if I want to invest in this. Is this interesting? Now it's kind of, I want to, I don't know how, or who can help me, for your previous point. And one of those is they think, I don't know how to manage private keys. I don't know how to do custody. Is it all self-custody? It's not solved. There are a lot of solutions out there that enable clients to not really deal with the private keys anymore. On a retail side, the customer service around that for exchanges, not up to the level of what you might expect as a private banking client. But there's solutions in terms of custody. The provider manages the keys. You don't see any of that as long as you're picking somebody safe, secure, that can show you their processes and procedures around what they've built and the technology. It's largely trouble-free for a new investor who doesn't really understand that.
Right, okay. And I guess also it depends on your trading style. So if you're a very active trader or a high-frequency prop shop or one of these sorts of a hedge fund type style, then it gets more complicated, I guess, because in the digital asset custody world, you've got your hot wallet, which is online, and your cold wallet, which is removed from the internet, and it's difficult to trade this. But if you're a private investor looking for maybe not long-term in this game, but maybe let's say a medium-term, a stable outlet for you, more of a buy and hold strategy, then I guess it gets easier.
Yeah, buy and hold. You probably want to start simple, start small, a few percent into a spot trade. You can buy spot, but we'll still talk about Bitcoin. Basically store it for free, or in cold custody, store it for cheap or free, depending on the deal. Like for us, we don't charge for custody at the moment, and we don't charge for cold custody while we're getting clients online. And it doesn't cost anything. There's no holding cost. It's easy to transfer in and out, so you buy and hold it. And you can actually lend that out as, in fixed income products if you like. For active traders, yeah, maybe they want to be futures, maybe they want to be doing something else, but I think, go with the cheapest, lowest cost, simplest way to hold that for the medium term.
Yeah.
So we've been talking about, I guess the value story of Bitcoin and from an investor point of view, store of value and so on. You mentioned earlier that as a means of payment, it hasn't really achieved what it set out to. Yet we're seeing signs that might be happening. So for example, PayPal is now ready to accept Bitcoin into its wallet. So what does that mainstream of payments in digital assets mean? I mean, is that going to have an impact on volumes and price levels?
You have a relationship with somebody like PayPal, you're in some digital assets, maybe you're in one of the stable coins that are out there, or maybe one of the new central bank digital currencies becomes available. How easy it is for you to switch into a store of value now like Bitcoin. You understand it might be available on the same platform, depending on who you've gone with. Once you're in the space, I think it's going to have a massive value. Even if Bitcoin never becomes a form of payment or a main form of payment, if it remains a store of value as it's kind of grown to be and continues to elicit confidence, I think that all the type of mainstreaming is just,
It makes it so much easier to
yeah.
get in and get out.
Right? I mean, mostly now for new clients, it's just like, I don't know how to get started. Once they get started, they find out it's actually not that difficult. If it's super easy for you to get started, it's just going to flow down the line.
So walk me through the journey here for someone who wants to get into this space. There's a variety of different ways they can approach there's spot market, there's now funds. In Hong Kong, we have the first regulated tracker fund for Bitcoin. Then you get into, I guess, ultimately it leads to structured products at some point. Derivatives exchanges. Is there a one-stop shop for this? How does somebody get started?
Not that many platforms are fully integrated that also cater to private wealth individuals or family offices, folks who need actual relationship management in terms of getting started. But it is out there. That's what we're building ourselves. So the normal life cycle, if you haven't done it before, would be to buy, right? Simply use fiat, buy Bitcoin, buy another cryptocurrency. I'd recommend starting with Bitcoin or something very straightforward. I would say in spot. You could invest in a fund, but the fund landscape right now, unless you're unable to use spot for some reason, you're going to pay fees. So if you're just doing something Delta One, you're going to pay fees. They often trade at a premium. So it's actually not super cost effective to hold straight Bitcoin in a fund. And you probably don't want to be doing something active that's locked up, like an actively traded fund if you haven't done your research. The space is new enough as it is. So you buy spot, you go in. I think the next couple things you're going to be looking at is, did I buy spot at a place that has a custody solution? You should definitely look for that. Otherwise, now you have to make two decisions. One, I bought it, and now where do I put it? Right? So do that research on the way in. So we have spot trading, of course. We have a custody solution. We have something called the Custody Gateway, which allows our customers, if they want to choose to store their cold keys in different geographic locations, which is interesting from a diversification standpoint. So they can buy, they store in custody. If they just buy and don't think about it, it automatically goes into custody. It's very simple. Very quickly after that, we find even people are newer, like, can I make some money on this? Well, okay, yeah, so there's fixed income products, there's borrow and lending products. We're coming out with those shortly. That's probably where you live second after you've solved the sort of spot and storage problem. Then structured products. They're very simple structured products. They pay a yield. They're just much more interesting yields because of the high volatility in Bitcoin. We're launching those as well. And I think that is sort of the natural life cycle. And everybody has their different pace, but it's similar to what you're going to do in traditional finance, right? You're going to invest in equities, you're going to invest in a fund, you're going to invest in a certain kind of Delta One products, and then you're going to look for other products to sort of, now that you have your core holdings, make it a little bit more interesting.
In terms of wealthy families looking at estate planning and intergenerational transfer. Young people, Gen Z and even millennials, they're already buying digital assets. They probably have some Bitcoin on their phone. What does that imply for, I guess, the heads of the family that are thinking about family succession?
I think it makes Bitcoin a legitimate investment, or certainly a legitimate allocation when you're thinking about intergenerational growth and intergenerational protection of wealth. First of all, in terms of financial stability, as we talked about, similar characteristics to gold, store of value characteristics, and if you're not worried about it, you're at least thinking about deglobalization right now, stability of the financial markets, massive amounts of money printing. Those are all favorable for Bitcoin as they are for gold, but Bitcoin is also perhaps the gold of the future. That next generation, the millennial generation, it's going to be a huge transfer of wealth. They're already buying it, as you mentioned. I think if you're buying for them, you have to be buying what they're going to continue to buy. So for that part of their portfolio, this to me seems like it has to be some part in your planning.
So with Q9 Capital itself, new business in this space, what's the differentiator? Why are you here? What's different about what you do versus other players?
Yeah, that we were purpose-built for private wealth. So we designed the entire platform to solve the problems of private wealth. Relationship management, safety and security, and an integrated product set. So that was the feedback we got why private wealth wasn't moving into the space. So we designed it, and that's been a help to us to serve individual private wealth, but also family offices and wealth managers, actually.
Are you seeing, is the activity still more from individuals, or is it coming from the family offices themselves?
Yeah, I would say it's a combination. Of course, private wealth just has it easier in terms of getting online, and they can open up an account. But they're thinking about similar things to what the family offices are thinking about. So yes, private wealth is first, but family offices knocking on the door and asking the same questions.
Right.
Yeah.
So James, you come from the traditional finance industry, and now you're in digital assets. So tell us a little bit about, for people in the industry that are watching this, should they be thinking about a career in the digital asset space?
Yeah, in fact, I think eventually they're going to merge, and digital assets are going to become an asset class, part of traditional finance, and it's going to change traditional finance to some degree, and traditional finance is already changing it. When I started in the space, like I mentioned, it was kind of spot. Now many of the products that are readily available start to come online for Bitcoin and for all the other major digital assets. So yes, on the back end, you're building a finance 2.0, blockchain behind, and the transactions, the operations level, and I think that's going to affect traditional finance, and they're going to all come together. So I don't expect this to disappear, and I think the price of Bitcoin and the other digital assets sort of agree with me.
Thank you for your time
Yep.
and sharing what you see going on in the industry.
Thank you.